Welcome to World Talk Brief.
So a court ruling that promises trade relief, you'd think that would be a good thing, right? So why then did the markets react with a whole new round of uncertainty? Well, we're about to dive into a wild 48 hours where a Supreme Court decision, one that was supposed to calm global trade, was almost instantly flipped on its head by a single social media post, sending some serious shockwaves through international markets.
All right, so to really get what happened, we need to rewind to Friday. That's when this all got started with a sudden and pretty dramatic trade reset.
What happened was this. The U.S. Supreme Court struck down a massive chunk of President Trump's existing tariffs. I mean, we're talking about a huge portion of his trade agenda, and it was a major legal blow that kind of knocked down one of its key pillars.
So the legal nitty-gritty here revolves around something called the International Emergency Economic Powers Act of 1977, or IEEPA for short. This was the legal basis the president was using to impose all these duties. But the court came in and said, nope, that's an illegal application of the law. And just like that, this whole incredibly complex tariff structure was basically wiped off the books.
And how did Wall Street react at first? With a huge sigh of relief. You can see it right here. The S&P 500, the NASDAQ, the Dow, they all closed higher that Friday. And for a moment there, it really felt like this whole era of unpredictable trade tensions and expensive duties might finally be coming to an end.
But yeah, that feeling did not last long. Not at all. Because over the weekend, the president made a swift countermove that just completely flipped the board over.
In a post on social media, President Trump announced he was just replacing the whole old system. He said, and I'm quoting here, "I, as President of the United States of America, will be, effective immediately, raising the 10% worldwide tariff to the fully allowed and legally tested 15% level." So, just like that, a new single global tariff was in play.
And that is the number right there, 15%. This is the new baseline, a flat 15% tariff on all countries, effective immediately. I mean, talk about completely resetting the rules of the game. Okay, so now we get to the global market reaction. And as trading kicked off in Asia on Monday, what we saw was, well, not what you might expect. Instead of panic, there was actually a rally.
Yeah, instead of tanking, major markets across the Asia-Pacific just went up. South Korea's Kospi hit a new record high. Hong Kong's Hang Seng was up over 2%. It's kind of wild when you think about it.
So this brings us to the big question, the real head-scratcher. Why on earth would markets go up after a brand new, broad tariff gets announced? Well, the answer reveals this really complex and fascinating reshuffling of the entire global trade map.
You see, this new flat tariff didn't create a level playing field for everyone, not even close. It effectively created a whole new list of economic winners and losers.
And this table here really lays it all out. On one side, you've got the winners, countries like China, India, and Brazil. These are places that had been hit with really high targeted tariffs before. So for them, this new flat rate is actually an improvement. But then you look at the losers, the UK, Australia, allies who had worked out better deals under the old system. Now they're suddenly facing a higher rate. They're actually worse off.
Let's just zoom in on China for a second, because it is a perfect example. Morgan Stanley's economists ran the numbers. Under the old, complicated system, the average tariff on Chinese goods was about 32%. Now, under this new, simpler framework, their average rate actually falls significantly, all the way down to 24%.
And that is the key to why Asian markets were so happy. For a lot of the biggest economies in the region, this new flat rate, even though it's still pretty high, brings something they value even more: certainty. As Morgan Stanley's Chetan Aya put it, the peak level of uncertainty on tariffs and trade tensions has passed. For them, a predictable rate is way better than an unpredictable and higher one.
Okay, but let's pivot back to the US, because on Wall Street, the mood told a very, very different story. When trading started up on Sunday night, US stock futures, which are basically a preview of where the market's heading, they just dropped. The Dow, the S&P, the NASDAQ, all of them were in the red. That optimism from Friday was completely wiped out, signaling that, yep, a whole new wave of anxiety was here.
And it wasn't just limited to stocks. This was a classic risk-off move. You saw other assets that are kind of like economic barometers, things like Bitcoin and crude oil, slump as well. And that tells you this was a broad market concern, not just an issue in one sector. So for Wall Street, the real problem wasn't the 15% number itself. It was the brand new layer of deep uncertainty that it slapped on top of everything. What does this do to inflation? What about global growth? And maybe the biggest question of all, what happens next? And that really brings us to our key takeaway. Tim Holland from Orion Wealth Management put it perfectly, saying, Wall Street and Main Street are going to be dealing with the issue of trade and tariffs for some time to come. So, while the legal framework has shifted dramatically, the underlying economic and political conflict over trade is clearly far from over.